Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. So here's what just happened. Today, January 13th, 2026, every major central bank in the developed world, from Europe to Japan to Canada, they all lined up behind the Federal Reserve and Jerome Powell amidst this standoff with Trump. They put out a joint statement pledging full solidarity and defending the independence of the Fed. So let's break this down, because central banks usually don't say everything together. This was coordinated, it was very loud, and it was public. And that only happens when they're scared. I'm just pulling up the post now to show you guys this, but look at this. The European Central Bank on X put out a statement from the international central bankers, and they are standing in solidarity with Jerome Powell. You gotta love this sentence here. The independence of central banks is in the interest of the people we serve. Top tier comedy. So this begs the question, why would they be scared? Because we know Powell, the guy that's running the Fed, is now in a standoff with Trump, and Trump's legal team right now is digging into Powell's actions. We know there's been open talk of replacing him when his term ends here in May, but this is getting more exciting now that the global banking establishment is hitting the red alert button. Their credibility depends on the idea that central banks, remember, they're above politics, they're untouchable, they're apolitical, they're professional, they're totally independent. At least that's the narrative that they try to sell to us. And once that illusion cracks, everything changes. You know, interest rates, the bond markets, the global capital flows, they all start reacting to politics and not the policy. So the key insight here is that when powerful people start fighting over who controls the money, regular people start to look for a way out, and Bitcoin is that way out. So we're going to dive into a few things today. We're going to talk about this standoff between Trump and Powell, and we're also going to be talking about how the banking lobby is currently trying to influence Congress into making provisions in the Clarity Act that go after stablecoin acceptance and usage. We are in a war for the future of money. This is tremendously exciting, but I gotta remind you guys, it's pretty amazing being a Bitcoin maximalist, because we know that Bitcoin doesn't need a chairperson to speak for it. Bitcoin doesn't have an election cycle. We know it doesn't beg for permission from any central banker, and it doesn't flip-flop on interest rates or issue these press releases to calm markets. Bitcoin is just there, issuing blocks every 10 minutes like clockwork, forever capped at 21 million. So when you're seeing the world's central banks holding hands in public like this, trying to keep the lid on the pressure cooker, what you're really seeing is the beginning of a shift. People are waking up to the fact that control over money is being contested, and in that contest, Bitcoin is the only form of money that no one can rewrite mid-game. This is extremely bullish for the asset, and I'm not talking short-term price chart bullish. I'm talking structural, long-term, macro-level bullish. The cracks in the system are showing, and capital is watching. So let's get to the real fight behind the curtain, the most entertaining one. Powell versus Trump. They're not disagreeing necessarily over policy, at least just policy anymore. This is bare knuckle institutional warfare going on. Because we all know that Trump wants lower rates heading into the election cycle. He has repeated this time and time again. He wants to run the economy hot for as long as possible. He wants to inject more liquidity into the system to make the gains look better. He has blamed Powell directly for inflation, for high mortgage rates, for choking the economy, and now he's really starting to turn up the heat. And then on Sunday, Jerome Powell put out a statement that the DOJ is investigating him. And Powell, to his credit, he's been holding the line so far. But this is the uncomfortable truth. When a central bank has to defend itself in public, it has already lost part of its power, which is why the global banks have to rush in to defend them in an act of solidarity. And the people who really get what's going on, we need to understand that the Fed's weapon has never been interest rate changes. It's always been about credibility. The idea that the Fed stands above politics, that its word shapes markets because everyone believes that it will act consistently in the better interest of the people. It's amazing that people just automatically believe that the Fed is apolitical, but anybody with a brain, no offense, we know that monetary policy is literally fiscal politics. You can't be apolitical. So when the credibility of the Fed really starts to slip, the market is going to have to start wondering if the rate policy is going to follow the polls instead of the data, and you're going to get volatility, you're going to get tremendous uncertainty, and in a debt-based system like ours, we all know that uncertainty is always expensive, and that is the setup here. And now think about Bitcoin in this environment, because we've seen Powell and Trump continue to slug it out over who gets to drive the fiat bus off the cliff slower. Bitcoin quietly continues to produce blocks every 10 minutes. There's no campaign cycle here. There's no hearings. There's no chair. There's no bribe or fire. It's the exact opposite of what we're watching play out in Washington. This chaos makes Bitcoin look like the adult in the room. And yes, we know that all of Trump's ilk, the people surrounding Trump, they're all pro-Bitcoin. They're all pro-stablecoin. We're going to get into that. But the big takeaway as it relates to the public view of this entire mess is that every single time monetary policy becomes this political football, more people start to ask, why does one group of unelected officials get to control the value of every hour that I've ever worked? And that's when they find Bitcoin and they don't go back. So this fight isn't bearish, it's a gift. You can literally see the narrative changing on the social media right now on X. It's happening because this exposes the flaw of governance over money in real time, and it highlights why a rules-based, decentralized alternative is no longer a fringe idea. This is a monetary divorce playing out in real time on cable news, and Bitcoin is the prenup. So over the past year, there's been a lot of tinfoil hat conspiracy theorizing over stablecoins and how Trump is surrounding himself with people who understand the value and utility of stablecoins, and we know that the central banks view this as a threat, obviously. Because here's a riddle. What do you call a dollar that moves faster, settles instantly, also earns yield, and doesn't sit in a too-big-to-fail bank? Washington obviously calls that a threat to financial stability. The banks, they call it a problem, and Bitcoin, they call this a stepping stone. So right now in Congress, we know that there is a bill that's being debated on called the Clarity Act, and we are seeing tremendous lobbying pressure this week from the big banks. And what they're trying to do is trying to make it illegal for stablecoins to offer any kind of yield. That's correct. No interest paid, no points, no cashback. Even if the rewards come from an affiliate like a wallet or an exchange, it's on the chopping block. These banking people, they'll say that it's for consumer protection, but it's easy to see that it's about protecting their own deposits, obviously, because the banks know that if stablecoins become more attractive than checking accounts, the money will just walk away. And in this world, if money walks, so does their power. So think about the irony right here. They want to ban yield on the only version of the dollar that's actually backed by real assets like, treasury bills updated in real time, Bitcoin visible on chain, whatever stable coin it is, it's at least backed by assets. And then at the same time, they are paying you 0.01% on your savings while lending out your money for 8%. We all know that it has everything to do with Bitcoin because stablecoins, they are the fiat on-ramps. They are the connective tissue between dollars and digital assets. So if regulators try to kneecap stablecoins, especially the ones that are offering very attractive yields, they are shrinking the fiat layer and forcing people to think longer term. That long-term thinking leads to Bitcoin. And the reality is Bitcoin isn't trying to be a better dollar. It is a monetary exit ramp. We know it is the parallel monetary system that is operating right now. And when that system clamps down on innovation within the fiat system, the capital starts to flow into the harder alternative. So every single time that you're hearing about how Congress is going to try to ban yield on stablecoins here as it relates to this bill, you need to understand what it means. It's that they are scared of competition. And when the legacy system fears competition, Bitcoin becomes the default choice for anybody who wants to own their own future instead of renting it from a bank. So this attack on stablecoin yield right now, it accidentally makes Bitcoin more attractive. Less noise, more signal, more fiat lookalikes, clearer value proposition. Bitcoin is going to win via the process of elimination like it always has. So now let's talk about what happens in May 2026. That's when Jerome Powell's term as chair of the Federal Reserve ends, literally 4 months and 2 days from now. And the shortlist for his replacement is already getting passed behind closed doors. The frontrunners are Kevin Warsh and Kevin Hassett. That's correct. The two Kevins, both of them, have deep ties to Republican administrations and very public leanings toward Bitcoin and private digital dollars. These aren't just policy guys, these are ideological realigners. That is very obvious. And we know that Warsh has openly questioned the Fed's balance sheet expansion and suggested market alternatives, and Hassett has spoken favorably about monetary discipline, innovation in the currency infrastructure, and yes, Bitcoin itself. So what's going to happen if Trump decides to appoint one of these two guys? Well, that would mean the center of gravity totally shifts, because what if we have a pro-Bitcoin Fed chair with a pro-Bitcoin SEC chairman, a pro-Bitcoin CFTC chairman, a pro-Bitcoin Commerce Secretary, and a pro-Bitcoin Treasury Secretary, and a pro-Bitcoin president and his sons run a Bitcoin mining company? Pretty easy to see how the tone is going to flip from regulate and restrict to accommodate and integrate. But this is the bigger insight. The idea of a pro-Bitcoin Fed chair, even before it happens, begins to change how capital allocates risk. As these pieces fall into place over the next year, over the next 2 years, you really think that the macro funds out there aren't going to start reevaluating Bitcoin as a strategic asset? You think the treasury desks aren't going to start modeling BTC exposure as a hedge? We're already seeing boardrooms of corporations starting to have conversations about treating Bitcoin like it's digital real estate, digital cyber Manhattan, rather than digital roulette. And this transition, it's not going to require a single Fed rate cut. It requires one thing: a credible signal that monetary policy might finally start to respect the digital scarcity that Bitcoin offers instead of pretending that it doesn't exist. This is how Bitcoin is going to continue to eat its way into the institutional mindset with this slow, long-term regime change. This new Fed chair is a huge moment. It could be the referendum on the future of money. And if this chair even nods in Bitcoin's direction, I really think that capital is going to flood into the rails that are looking for exposure. So maybe it's pretty smart to get there before they do. So let's talk about the real risk here, okay? What is the risk at the end of the day? Because it's not rate hikes in the long term, it's not inflation, it's not even recession. What it is, it's simply trust, because we know the US dollar system works because the people believe in it. They believe the Fed will act rationally. You should see what the sentiment is on social media about this showdown between Powell and Trump. I would say 90% of it are all about how bad of a look it is internationally for the United States. They're all acting like, oh no, it's such a tragedy on the world stage that people are losing faith in their central bank. The shock, the horror, am I correct? This belief, the credibility is the invisible glue holding together trillions of dollars in contracts, debt, savings, and global trade itself. And trust in this is very fragile. We're beginning to see that there are hairline cracks. And once this thing starts to slip a little bit more, we're just going to continue to see the dollar lose credibility. Obviously, on the world stage, this Powell-Trump saga that's going on is really starting to chip away at the trust. And this is actually after the worst year for the US dollar in the last 40 years as it relates to the valuation of it compared to other world currencies. So the year after the DXY performed absolutely terribly, now we're seeing a disagreement about who gets to control the monetary spigot heading into an election. So the foreign central banks can see this. They are making statements about it, which tells you that they are worried about something called contagion, because if markets start believing that the Fed takes orders from a political campaign, the bond market then becomes a roulette wheel, and that's what the cracks start to look like. You see the bond yields move in ways that have nothing to do with inflation data. That means the foreign buyers of all the treasuries start to hesitate, and they might demand a higher premium, and you start to see institutions rethinking about where to park their cash long term. And we start to see all these little doubts start to creep up, and that's when Bitcoin becomes even more obvious to people, because it doesn't have a trust premium. We know it doesn't rely on anyone doing the right thing, and it doesn't shift based on who wins an election or who gets appointed or what Mr. Powell says in his press conference. Bitcoin is trustless by design. So we see the Fed's credibility start to wobble just a little bit, but maybe this is justified after they've destroyed 99% of the dollar's purchasing power. So as a Bitcoiner, I enjoy every Fed credibility crisis. I like to pop my popcorn, watch this unfold because I know that this is all bullish for Bitcoin. I know that this doesn't mean that the system collapses tomorrow. It means that the market will start to hedge the idea that it could one day in the future. This is incremental progress for a decentralized alternative. So even if you don't want to wear the tinfoil hat and start saying that the dollar is going to die overnight, but the illusion that it is unshakable, though, that illusion is starting to crack, and Bitcoin will always thrive in that fracture. It's obvious. We know that Bitcoin has no top because fiat has no bottom. So it's just fun to see the system fracture. It's a joy. So tying it all together with Bitcoin being the obvious escape valve, this is why, let me be specific, right now, we see a political class openly debating on who should control monetary policy. We see the banks, they're threatening to kill off any digital alternative that could threaten their funding base. And then you have a growing part of the population realizing the rules of money are actually negotiable, and the people in power in our government are actually starting to accept this idea as well. You know, as long as you're in the room when it happens, of course. But most people aren't in that room. You look at the average American today, they're living paycheck to paycheck. They're watching their groceries go up and their savings continue to earn nothing. So they're going to start to ask, what can't they manipulate? What can't they print? And that answer leads them straight to Bitcoin. They don't have to read the white paper. They don't need to understand difficulty adjustments. They just need to feel it. They need to see the dysfunction and they need to want out. Bitcoin offers you final settlement, no middleman, no political gatekeeper in this mess, no bailouts, there's no favoritism. It runs no matter who's in power. It will never pause for elections, and it will never grovel for legitimacy like you see the central banks doing right now. Every single time Powell's authority gets challenged, Bitcoin becomes the safer bet. Every single time that the Congress continues to outlaw alternatives, it validates the need for an alternative. And every single time the fiat system shows that it's governed by power instead of principle, Bitcoin proves its value simply by existing. This is why Bitcoin will never need a marketing department, because it has Washington to do the job. The system is terminal, so all it has to do is continue to fail. So you have to think, if you are outside the system, and if the people in charge of the system are willing to rewrite the rules of the game just to continue to keep what they think is control, the smartest thing that you can do is to step outside of the game entirely. And this is why, on the most fundamental level, Bitcoin is the exit, and exit is becoming the most rational trade on the board. This is a regime change in slow motion, and if you know what to look for, you can position ahead of it. And if you want to be positioned before this shift continues to happen, Swan Private is for you. Swan Private helps individuals, high net worth families, family offices be positioned before the most incredible wealth transfer in the history of humanity. And they help you build a position in Bitcoin, not paper IOUs, very securely and strategically. Visit swan.com/no-second-best to learn more. My name is Adam Livingston. I am the Bitcoin Wizard. Please like this video and subscribe to Swan, because we bring you the daily Bitcoin insights with more energy than anybody during the most exciting time, the transformation of capital markets. It's amazing. So thank you for being here with us every step of the way. Have a terrific day. Do not party too hard. Class dismissed.